The window of opportunity for buyers to be in control to buy a home is rapidly closing here in Southern California. Find out what this means for you if you're buying or planning to sell a home.
Welcome to Rock Real Estate with Stu Simone, where we make real estate informative and fun. And now, here's your associate broker, real estate attorney, and mortgage loan originator, Stu Simone.
Hey everyone, we're seeing sellers start to take back control of the housing market here in Southern California as home prices stabilize and inventory levels continue to remain very low. And we're diving into exactly how much, along with why this is happening. Inflation continues to fall, keeping mortgage rates steady. In fact, mortgage rates have fallen from their high of over 7% 3 months ago and are now hovering around 6% as of today. Redfin just published an article on February 2nd showing that rates have just dipped below 6% in some cases. So they are at the lowest rates since September of 2022. So if you're a buyer, you may be saying, mortgage rates are going down, this is great.
Yes.
But hold on there, partner. If the mortgage rates continue to dip, thousands of buyers will come back into the market. And what does that mean? More demand, and that means back to a seller's market. I've been saying there's a window of opportunity to buy a home here in Southern California up through spring, and that window looks like it's starting to close. Bottom line, buyers, don't stay out of the market because you think the rates are high now and will drop soon. That's only half of the equation, as I will explain. And keep in mind, if the rates do drop, you can always refinance. But you have bought your dream home and will already be enjoying it. Now, if you're planning to sell a home, stick around as I'll be covering exactly what you need to do to keep your home sold in today's real estate market. Hello, my name is Stu Simone, and besides being an associate broker with eXp, the world's largest real estate brokerage, I'm also an attorney on the Legal Shield Real Estate Hotline, so my boots are on the ground and in it. If you're thinking about making a move this year, give me a call, text, or email, and let's chat. And you can set up a consultation time at stuartsimone.com to avoid the dreaded phone tag. All right, let's take a real quick look at what's happening nationally, which is driving the Southern California housing market locally. Inflation fell again this past month to 6.5%. That's down about 1.5% in the past 3 months. Now, this is helping mortgage rates stay steady, which are affected by inflation, as I've explained before. Mortgage rates have remained in the low 6% range for the past 3 months now, thanks to easing inflation concerns. If inflation holds steady or continues to drop over the coming months, mortgage rates could fall into the fives. As I mentioned a moment ago, they just crossed the 6% line. So the fears of interest rates hitting 8 to 10% seem to be well behind us now. Phew. But listen, if mortgage rates do fall or even just stop rising, this might unleash the pent-up demand that has been lingering in the housing markets and drive us back into a seller's market in the spring and summer selling season. Buyers, do you remember that? Nobody would even talk to you unless you bid over listing price. And then you had to bid against other sellers and hope and pray that you won out. Now let's dive into what is happening here in the Southern California housing market. A big reason for this pent-up demand is coming from millennials. As a group, millennials delayed getting married and starting families, and as a result put off their home buying. But now they're getting married, they're having babies, and realizing they need to buy a home or move up into a bigger home. So now more millennials are starting to shop for homes, which means more demand. Here's the problem, though: supply. Many potential sellers are essentially locked into their homes because so many either purchased or refinanced into 3% interest rates over the past 2 to 3 years. So if they move now, they'd be signing up for a 6% interest rate and much higher monthly payments than what they are paying now. So this is causing inventory levels to remain low. Now, the confluence of these two events, more millennial buyers, which is more demand, and fewer people selling, less supply, could likely cause home prices to stabilize or even start rising again. CoreLogic, the go-to source for real estate analysis, just predicted that home prices should rise another 3% in 2023. So we can shift rapidly from the balanced market that we're in now into a seller's market. So let's look at some stats. Housing prices for a single-family home in Southern California have been gradually falling since their peak in May of 2022, and the median price is just about $750,000. Although sellers are still listing around $810,000. Right now, they're probably not going to sell at listing price. In the San Fernando Valley and eastern Ventura County, prices have been essentially the same since September of 2022 at a whopping $1 million for a single-family home. And folks are listing their homes at just over $1.2 million. Inventory of homes has been rising ever so slightly for the past year, to about 25 days, which is incredibly low, but about double what we had last year at this time. So homes are taking longer to sell these days, and we're averaging 35 days on market. This shows us that homes on average are taking more than twice as long as last year to sell. Compared to last month, the days on market rose by 6 days from 28 to 34. So homes are taking longer to sell here, which is consistent with what is happening around the country. Now, this is a great chart. Note how days on market was down to less than a week in early 2021 and are now 6 times longer. But also notice that since then, prices have not dropped. Now, this is what the data is telling us, but the data does lag behind the reality on the ground. I'm starting to see firsthand that buyer competition for homes is heating up. I just sold a townhome in Northridge, California that I had to file a lawsuit to evict the tenant. We tried to list in the summer, but the lawsuit took 6 months, so we listed around Christmas time. The owner was crying because he thought we'd have to lower the selling price and he'd take a big hit from when we had first tried to sell it in the summer of 22, since rates had shot up during that time. But after doing my research, I came to the conclusion that I should keep the listing price the same, and sure enough, we sold it in just over a week at full price. And both the seller and buyer were happy. Now, that's what I like to see. The takeaway here is that you really need to do careful research. It can make all the difference. So if a home is priced really well and is in a desirable area, it's still moving in 1 to 2 weeks. But many other homes are taking much longer to sell because the sellers are not tracking the market. Another big data point I like to look at is the final sales price to original list price percentage. This tells us how much above or below the list price that homes on average sold for. So homes sold for 97% of list price in January 23. That means on average, homes had to drop their price by 3% in order to get sold. During the pandemic, we were seeing average sales to list prices usually from 102 to 107%. Now, 98% is considered a balanced market. Below this is indicating a buyer's market, and above that is considered a seller's market. As you can see, we are somewhere between a balanced and a buyer's market right now. So, what does this mean for you if you're thinking of buying a home? Well, if you're thinking of buying, I think there's still a window to get credits and maybe price reductions and good opportunity to find different homes available, although I'd focus on the credits. But that window's starting to close in most markets. Before rates lower, I would expect the next 2 to 3 months to be prime buying season for a buyer. It appears that we are on track for a shift back into a seller's market, though, as inventory remains extremely low, and as I was saying, the pent-up demand starts to unleash in spring and summer, as it does every year. At the moment, buyers can still shop around and find the house they really want. Why is that? Well, there are 4 reasons. If you're looking to buy a home, you have 1, higher inventory levels than a year ago, giving you more options to choose from. 2, lower competition from other buyers due to the recent higher mortgage rates. 3, opportunity to get sellers credits to cover closing costs and buy down interest rates. And 4, being able to buy at 10% off where prices were 6 to 9 months ago. The downside is that rates are comparatively high, but that can be refinanced out in 6 to 12 months if rates do drop. Now, one thing that could throw a monkey wrench into this is if the tech layoffs that have been on the rise lately continue and begin impacting the overall economy. So we will be paying attention to the job market. A lot of layoffs would mean increased supply, which could halt the rise in prices. Now, with inflation dropping, mortgage rates have stabilized again around 6%, which is down over a full percent from the high about 3 months ago. This is in line with what I've been predicting, that mortgage rates would drop once inflation drops. If inflation continues to fall over the next few months, it's conceivable to see rates back in the 5% range. But if rates do drop, get ready for a lot more buyers, especially those millennials, entering the market again. However, I wouldn't anticipate that prices will suddenly spike back up. I think we'll see a more normal market of some houses selling over and some under, depending on how good of a home it is. So, what does this mean if you're planning to sell a home in the next few months? Despite the shifting winds in the housing market with more buying activity picking up, it's still very important to price your home ahead of the market, meaning lower than you would like to. This is going to drive more interest for your home online. This will in turn result in more showings, and that will result in more offers. The goal is to get at least 2 solid offers, which will allow you to drive the sales price up higher. But even if you do end up with multiple offers, be prepared to give credits to buyers to help buy down interest rates to make the home more affordable. Many buyers need the interest rate buy downs to be able to purchase right now. Stay tuned to this channel because my next video will tell you all you need to know about rate buy downs. It's also more important than ever as a seller to make sure your home is properly prepared to sell. This can include things like painting the exterior and/or interior to brighten the home, give it a neutral color. Have you noticed that white is all the rage now? So bright and white, light. You want pressure washing, replacing carpets, or at least carpet cleaning. If you're wanting to get an idea of what your home may sell for and what it should be priced at, contact me and I'll run a no-obligation home value for you. So that's a complete overview of the housing market here in Southern California. Sellers, I'll show you the myriad of selling options we have here at Rock Real Estate, from online auctions to fix now, pay later, to having my lender buy your house in cash now and letting you stay there until you find your new home. And for buyers, I'm also a mortgage loan originator, so I can get you pre-approved and ready to pounce on that dream home. Leave a comment here or email me back. Go to stuartsimone.com for consultation. Let me know what you think, and I'll see you on the next video right here on the Rock Real Estate channel.